Welcome to Explain It. Now, what if a government budget wasn't just a plan for the next year, but a blueprint for the next 25? That's exactly what we're going to unpack today.
Most people saw India's latest budget and just focused on the immediate numbers, but they missed the real story. This wasn't just some plan for the next 12 months. It was the first draft of a blueprint for India in the year 2047. So think of this budget as an architect's blueprint for the next generation. We'll explore why it's not just another budget, how it chose discipline over applause, its massive bets on powering the future and building a digital backbone, and finally, we'll look at the big debate around its risks.
So, why now? What on earth gave the government the confidence to make such a long-term gamble? Well, it all starts with the health of the economy. The economic backdrop was, frankly, remarkably stable. With strong growth projected and inflation unusually low at just 1.7%, the government had this rare window of opportunity. That combination of high growth and low inflation is like a giant green light for making big, bold moves. And that's exactly what they did.
Right, so with that economic stability as a safety net, the government made its first move, and it was one that chose long-term discipline over a quick win with the markets. The market's reaction was immediate, and it was negative. The reason? A massive 150% hike in something called the Securities Transaction Tax, or STT, on certain types of trades. This was a direct shot at short-term speculators, and it sent a very clear signal. We're not interested in quick profits. We're building for the long haul. And this whole philosophy of rewarding patience wasn't just limited to the stock market. Nope. The government applied the exact same logic to another hugely popular investment, sovereign gold bonds. Okay, here's the key change. Before, you could buy a gold bond from someone else, hold it for just a short time until it matured, and you'd still get the tax-free perk. The government closed that loophole. Now, that tax break is a reward reserved only for the original investor who shows the patience to hold it for the entire term. The message is just so consistent. Long-term commitment is what gets rewarded.
All right, so we've gone from market discipline to national infrastructure. Let's look at one of the most ambitious parts of this blueprint, a plan to secure India's energy future for generations to come.
The budget launched a nuclear energy mission for Viksit Bharat, which basically translates to Developed India. This signals a huge strategic pivot. It's not just about keeping the lights on, it's a foundational bet on achieving long-term energy independence and hitting some really ambitious climate targets. And the scale of this ambition is just staggering. 100 gigawatts of nuclear power by 2047. To put that in perspective for you, that's a jump of more than 12 times the current capacity. I mean, we're talking about building a massive new energy system pretty much from the ground up. So how are they going to achieve this? Well, a key part of the plan is betting on new tech like small modular reactors, or SMRs. Think of them as factory-built, plug-and-play nuclear plants that are faster and cheaper to deploy. The government is even amending laws to allow private companies to invest in nuclear power for the first time, which is a truly historic shift. Now, a modern economy doesn't just run on energy, it runs on data. And the next pillar of this long-term plan is to build a digital backbone that can make India a global data superpower. And to make this happen, the government is basically rolling out the red carpet. They've announced one of the most aggressive incentives you'll ever see, a tax holiday for foreign cloud giants that extends all the way to 2047. The goal is pretty simple: get the world's biggest tech companies to build their data centers in India. But there's a clever catch. The deal is, you can serve your global customers from India tax-free. But for your customers in India, you have to operate through a local company and pay local taxes. It's a win-win. India gets world-class infrastructure while ensuring the profits from its own massive market stay in the country. But look, a plan this ambitious is bound to have risks. Not everyone is convinced this is the right path. So let's be fair and look at the other side of the argument. Okay, so everyone agrees that spending a massive 12.2 lakh crore, that's about 1.2 trillion rupees, on infrastructure is going to fire up the growth engine. But here's the catch. Where does that money come from? Well, the government has to borrow it. This increases the national debt, or what economists call the fiscal deficit. The risk is that if that debt gets too big, it could create instability and actually harm the very long-term growth this budget is trying to achieve. It's a very delicate balancing act. So when we step back and look at all these different pieces, the market discipline, the energy bet, the digital backbone, and the economic risks, What does the final blueprint really look like?
Ultimately, this budget is all about trade-offs. It's a conscious decision to accept some short-term pain, unhappy markets, frustrated traders, in exchange for a shot at a massive long-term gain. It's a huge gamble on energy security, digital infrastructure, and industrial self-reliance.
So, the blueprint for 2047 has been drawn. The strategy is clear, and the tough choices have been made. The only question that remains is the biggest one of all. Can they actually build it? The answer will unfold not in the next year, but over the next 2 decades.